Macro pop quiz. Money and banking. True, false, or uncertain. A successful sterilization operation leaves the country's total monetary base completely unchanged. The answer is true. The base expansion from buying an asset is exactly offset by selling an equal amount of macro pop quiz. Money and banking. True, false, or uncertain. Monetarists hold that inflation is always and everywhere a monetary phenomenon from rapid money growth. The answer is true. Friedman's famous thesis, persistent inflation cannot occur without macro pop quiz. Money and banking. True, false, or uncertain. In a deep liquidity trap, expansionary fiscal policy becomes highly effective. The answer is true. Government borrowing won't push up rates, so there's no crowding out and the multiply macro pop quiz. Money and banking. True, false, or uncertain. The money demand curve shifts right when total real national income Y increases. The answer is true. Higher real income means more transactions, so households need macro pop quiz. Money and banking. True, false, or uncertain. A rise in the general price level P shifts the demand curve for nominal money to the left. The answer is false. Higher prices require a larger nominal quantity for the same real transactions. Macro pop quiz. Money and banking. True, false, or uncertain. Central bank independence is generally linked to lower average inflation across developed nations. The answer is true. Independent banks can resist political pressure to print money for short-term or a macro pop quiz. Money and banking. True, false, or uncertain. Depositing $1,000 of physical cash into a checking account changes M1 by 0 immediately. The answer is true. M1 includes both cash and deposits, so the transaction just shifts. Macro pop quiz. Money and banking. True, false, or uncertain. Open market sales of government bonds by the central bank contract commercial bank reserves. The answer is true. Banks pay for the bonds from reserves at the central bank, shrinking. Macro pop quiz. Money and banking. True, false, or uncertain. If the central bank pays higher interest on excess reserves, banks generally lend more to the public. The answer is false. Higher interest on reserves makes banks park cash safely at the central bank. Macro pop quiz. Money and banking. True, false, or uncertain. The transaction demand for money is driven mainly by money's function as a store of value. The answer is false. It's driven by money's function as a medium of exchange that facilitates. Macro pop quiz. Money and banking. True, false, or uncertain. Speculative demand for money rises when people expect market interest rates to climb soon. The answer is true. Expected rate rises mean falling bond prices, so people hold cash to avoid macro pop quiz. Money and banking. True, false, or uncertain. Hyperinflation typically sends the velocity of money V to extreme levels. The answer is true. As money loses value by the hour, people spend it instantly, sharply accelerating. Macro pop quiz. Money and banking. True, false, or uncertain. In quantitative easing, the central bank typically buys government securities from the secondary market. The answer is true. It buys existing bonds from private financial institutions, not direct. Macro pop quiz. Money in banking. True, false, or uncertain. The monetary base, or high-powered money, equals cash in circulation plus total bank reserves. The answer is true. The base B is the central bank's direct liabilities that feed the macro pop quiz. Money in banking. True, false, or uncertain. Under a gold standard, a country keeps complete independent control over its monetary policy. The answer is false. The money supply is tied to gold stocks and flows, which removes money. Macro pop quiz. Money in banking. True, false, or uncertain. During deflation, the real value of cash rises over time, even if nominal interest rates are zero. The answer is true. Falling prices mean a fixed nominal dollar buys a larger macro pop quiz. Money in banking. True, false, or uncertain. Credit cards and digital phone payments generally reduce the public's transactional demand for cash. The answer is true. Digital options let people complete transactions while holding less. Macro pop quiz. Money in banking. True, false, or uncertain. Seigniorage is the revenue a government earns through its unique power to issue money. The answer is true. It's the profit when the value of money created exceeds the cost. Macro pop quiz. Money in banking. True, false, or uncertain. A lasting drop in consumer confidence can shrink broad money M2 even when the base is fixed. The answer is true. Fear makes banks cut credit and consumers repay debt, shrinking the macro pop quiz. Money in banking. True, false, or uncertain. The nominal interest rate can be seen as the direct opportunity cost of holding liquid cash. The answer is true. Holding cash foregoes the nominal interest you could earn on a bond or macro pop quiz. Money in banking. True, false, or uncertain. With an internal injection, the eventual money supply expansion depends on the size of the multiplier. The answer is true. The deposited cash becomes new reserves, multiplied through successive macro pop quiz. Money in banking. True, false, or uncertain. Raising the money supply during high cyclical unemployment can temporarily expand real GDP short run. The answer is true. With sticky prices, added liquidity lifts aggregate demand, raising macro pop quiz. Money in banking. True, false, or uncertain. The zero lower bound is the barrier where nominal rates can't easily go much below zero. The answer is true. Push rates deeply negative and depositors withdraw funds as physical cash. Macro pop quiz. Money in banking. True, false, or uncertain. Velocity of money is nominal GDP divided by the total money supply, V equals PY over M. The answer is true. It captures how many times an average dollar changes. Macro pop quiz. Money in banking. True, false, or uncertain. When the central bank sells foreign currency reserves to defend the exchange rate, domestic money supply contracts. The answer is true. It absorbs domestic currency from local buyers in exchange for foreign cash. Subscribe to Macroeconomics with Michael. Like, share, and drop your answer in the comments.